It's everyone's favorite time of the year, tax season. But actually, it is a good time to think about the taxes from last year because with cryptocurrency, the markets were booming. A lot of stuff going on last year. I got involved with DeFi, staking, mining, a lot of different things that I wasn't into in prior years. Pair my buy and hold with all those new activities, my taxes got a little bit more complicated. But not to worry, I used a tax software that I've used in the past and I wanted to do a review on it. It's called TaxBit and kind of walk through the process. If you're using a different tax software, it's probably similar, but I just want to talk about the pros and cons and just some of the things I learned along the way. So if you are someone with the following activities such as DeFi, being a liquidity provider, or staking on something like Coinbase, maybe you're using BlockFi or Gemini for crypto lending or mining, this tax software may be valuable because of the amount of transactions that you have. My total amount of transactions was around 2,962. Yeah, I'm not going to do that by hand, which I don't think even if you do have a small number of transactions, anyone would do it by hand unless you're insane. Anyway, with that high number of transactions, using a tax software that connects all of your different wallets, exchanges is pretty crucial. High level, what is the purpose of this tax software? It's supposed to be tracking when you bought cryptocurrency, when you sent it to different wallets, when you sold it, all to calculate the cost basis for those coins and from an accounting perspective, when to realize taxable events. With all that said, in order for everything to work properly, you need to connect every single wallet that you've used. When it comes to exchanges, you have TaxBit network companies, which really means that you can authorize BlockFi, for example, to give all the transactions that you had with BlockFi to TaxBit. Log into BlockFi, you authorize, and boom, everything is syncing. For all these other exchanges, you would just create an API to be able to view the transactions on this exchange. When it comes to actual wallets, for instance, MetaMask, you would select the cryptocurrency that the MetaMask is for, and then you would enter your wallet address down here, and that's all you need to do. It would track all the transactions because it's a public blockchain and it can see all of your transactions anyway. So all it really needs is your public wallet address. And I thank the crypto gods that the Helium wallet was one of the options because this had the highest number of transactions. Why? Because every couple hours I'm mining Helium, and every time you mine a certain amount of Helium, whether that's 0.0004 Helium or 1 Helium, doesn't matter. It's a taxable event that's considered income. The most manual process is when you import a CSV file. I had to do this for Crypto.com. It's essentially uploading all of your transactions. For getting the transaction history from something like Crypto.com, it's very simple. You open your app, you go to accounts, you go to the transaction history, you click this little export button, you download it to your phone based on a certain time range and send it to yourself via email. And now you have the file that you need to upload. Once you get through the process of connecting all of your wallets, downloading all the transactions, you get to the fun part. You get to see how much you get to pay in taxes. Or if you lost a bunch of money, potentially how much you can deduct from your taxes. When you get the big reveal of the amount of taxes potentially owned, you'll get it in 3 buckets: short-term capital gains, long-term capital gains, and total income. The difference between all 3 of these buckets is the way that it's treated from a tax purpose. The short-term capital gains tax is going to be higher versus long-term capital gains tax because it's held for less than a year. It's going to be taxed like ordinary income. The long-term capital gains tax, you get a benefit because you held the asset for more than a year before selling, and the tax rates are going to be lower, 0, 15, or 20% depending on your taxable income and filing status. Lastly, you have income through things like referrals, mining, staking, interest, or rewards, and that's going to be taxed like ordinary income. For a fun little refresher here on tax rates for the different filing statuses as well as taxable income, this is for your short-term capital gains tax as well as the ordinary income. And then long-term capital gains tax, it's broken out like this depending on your filing status. It definitely pays to be a long-term investor versus a day trader. When it comes to tax forms that are generated with all of this information, we have a 1099 miscellaneous, which covers all the income payments, the 1099B, which covers the capital gains and losses, and then the 8949, which is the detailed report of all of those transactions. Let's get into the pros and cons of using something like TaxBit. It is pretty easy to use, so connecting an exchange exchange or connecting to a wallet address, very simple. The most complicated thing I would say in terms of uploading transactions is uploading a CSV file, but really that's not that hard. The other thing, you have unlimited transactions for whatever plan that you get with TaxBit. I just use the basic plan. With that, unlimited transactions, which is massive because if there's any service out there that has a limit on transactions and you are mining or staking or getting interest, you're probably going to be overpaying. So I like that the fees are flat. From a cost perspective, I would say it's pretty reasonable, especially the basic plan being $50. Having everything automated for you once you get the transactions imported is great. And they have a free option. When it comes to customer service, I did have a couple of questions that weren't answered necessarily by articles. So I had to go on to their chat system, and a little cheat code. If you just go ahead and type in human please right away. I don't know if everyone does that, but I tend to. If I have a more complicated question, I was able to connect with someone in a pretty short time frame, and the customer reps were pretty helpful. Of course, not everything is perfect. It's not a touch a button and everything's done automatically. It's all rainbows and butterflies. There were some hiccups, so let's talk about some of the cons that I had with the software and some of the improvements that could possibly be implemented in the future. The first thing that comes to mind is the crypto wallet support. And what I mean by this is the support for altcoins when it comes to directly connecting your wallet via a wallet address. You'll see things like Bitcoin, Ethereum, some of the bigger names here are supported. But if you have altcoins, let's say Angry Squid Coin, yes, they are supported. And if they're not, they could be added to the database. But in terms of simply importing your transactions, it's gonna need to be a upload via an Excel file. Another con I would say is around the confusion when it comes to missing cost basis. The whole point of this software is to calculate cost basis in order to figure out how much tax you need to pay. Sometimes the transactions don't come through properly. Maybe you didn't connect all the wallets you needed to. Anyway, you need to complete the loop. So in order to fix these, you can't actually edit the transactions. You need to manually put in a transaction to solve the loop. And here are some of the reasons that you may run into this issue. One example would be if I got paid $500 in a stable coin, and in the software it was me selling that stable coin but never receiving it, it may be confused of where I got that $500, so it doesn't know how to classify the cost basis. So in order to fix it, I'd have to add a transaction, label it as income, and once I enter that transaction manually, the loop would be closed, the cost basis would be established, and it would see that when I sold this, it was actually just income. The last con I would say is that if you aren't a bit of a nerd when it comes to these tax questions, if you don't want to research some of these more complex issues, if you need a CPA with experience, you can use one of their partners, 1-800-accountant.com. You can schedule a free call with them, see if they can help out. And that's really if you want a CPA with crypto experience to help you. If I had to give them a rating out of 5, I would say 4.5 out of 5. The only reason I'm a stickler and not going higher than that is because of that cost basis issue that I had, and you do have to make some manual transactions, especially if you have a ton of transactions. And even if you don't use something like TaxBit and go with a different tax software, I think this video helps just for an understanding of the importance of getting all your transactions into a tax software and having it calculate the cost basis. That way you can calculate how much in taxes you owe Uncle Sam. Yay, taxes. Aren't they fun? If you guys did enjoy this video, make sure to hit that like button and consider subscribing to Major where we talk cryptocurrency, anything to do with money. Thanks guys for watching, and have a great day.